Well, good morning, everyone. This is Tom Asprey from the Etf Report. Thank you all for joining me. Those of you who have been here for the couple of earlier sessions, we talked about setting up the indicators that I use on stock charts and on freestockcharts.com, run by TC2000. Today I'll be mainly using the stock charts platform. And once again, if you missed the early ones, they are available on YouTube, and also there are links to them on our Facebook page. I'll show you towards the end. The plan today is, once in a while, to keep it fairly short, 30 minutes or so. I got quite a bit of feedback from the last survey. I'll be putting out a new one afterwards, after today's, and also with probably a recording of the video. It usually takes me a while to produce that, and probably be like Monday or so before that'll be out. But I got some interest in how I scan for stocks and ETFs, what are the criteria I use, and how I put the trading plan together. So, that's what I'd like to do today, take a recent stock recommendation. This one has turned out quite well so far. We're still in this position. Of course, not all of them turn out that well, contrary to what other people may tell you. So that's where risk management comes in, is very important. So my scan as of the close on April 5th, this chart is as of April 5th, came up with Harris Corp. And I looked at this chart, and initially what I do is I run through a bunch of weekly charts, just looking often at the chart pattern, with or without the indicators. And what I look for, is often a pullback to support. So we had a nice high up here in February. We moved down for essentially 4 weeks, a fairly normal correction. I think we moved from a high of about 69 down to, 50, 56 or so with this bar down here. I concentrate on that, and I know that, okay, I can place a stop probably under that level, so that looks like the risk reward, there might be reasonable. And, once I develop my list of candidates from the weekly chart, then I look to the daily charts and see how they look. And so let's look at a daily chart of Harris. Okay, this is what the daily chart looked like. One thing I do like about stock charts is they give you, the high and low peak. So you can see this, flag formation, you would call it. If we can always annotate these things, and that's what those of you who have signed up for a trial or some of the stock charts, it's nice you can save your patterns. That's what I do with my advanced decline analysis. But you can, you can draw this lower one from all the way down into here, various ways you can draw it. The basic thought from this formation is that if you have a high at 166 and change and a low of 156.90, that's roughly a 10-point range. So on a breakout of this formation, that's kind of your minimum target, would be, right around 175 or so. So that helps you gauge, the risk reward of the trade. And you can see we're coiling here. This, of course, has just a 20-day EMA, this line here. And so I do a lot of my work on the weekend. So this is where we closed on the weekend, a strong close. And so, that figures into, how I recommend, or how I look to trade the stock. So let's save those changes, and we'll move on to the next one, which I think is daily highlight. Here we go. So this is what happened. This was the close on that Friday. I was looking, I thought there was a possibility we would just break out to the upside. So often what I do is I stagger my entries, going pretty close to where we closed before, sometimes a little bit below it, but I often find, particularly in a very bullish market, if you try to go, a small percentage under the close, it'll often leave you in the dust. And then my second position is usually, down towards support. I got awfully lucky on this because I think I was made it by a couple of cents. You can see we were up on Monday, but then closed lower Tuesday, formed a doji. Dojis I find are pretty important formations. Also down Wednesday, hitting our second buy level. And then on Thursday, we had a strong close, and that, suggested that, okay, we were in okay. Our stop was going to go way down here under 156.90, this blue line. And, once, we get into the trade, I try to risk like 5% or less. And if we get into it and it goes to us our favorable, then I will tighten that stop up to reduce that risk in case we are stopped out. So, we'll look at the, and you can, if you have any questions or something you don't understand, feel free to do it in the chat thing and I will get to them when I can. Here's what the hourly chart looked like. Here was the close on Friday, high of 164.76. This low was right down into the buy area. Very nice kind of pullback. Over this chart, we have these lines, okay? So the solid line here, that's the weekly pivot. So if you're using stock charts and you go down here and you say, okay, pivot points, and you're using an hourly data, then it's going to come up with weekly pivots. So that's the weekly pivot level. You can see we came down to test that. This is the S1 support, which is often pretty important. And then, of course, this is the R1 resistance and R2 resistance. So let's take a quick look at why I like pivot points analysis. Short-term traders, this chart has some great examples that make you a believer. I typically don't rely a lot on the weekly. I do, occasionally for determining an entry point, or if something is really overextended, an exit point. But I pay a lot more attention to, the monthly and the quarterly pivots. Early April, you can see the week before we got that positive, we came right down into the weekly pivot here, held it, and that skyrocketed up. So that low was 59.29. Looks like the pivot was probably, 59.70 or 159.70. So we dropped below the weekly pivot here, came up. By the end of that week, we just perfectly hit the R2 resistance level the following Friday, which would have been the 12th. And of course, on Monday, we had a pretty good sell-off, back below that pivot. So those pivot levels can give you, I think one of the challenges that most traders, or a lot of traders face, and a lot of people I teach work with, is that, they got a nice profit, and it's sort of made it up to a decent return, but they go through that quandary of, do I hold on for another day? Do I close it out here? What do I do? And so, I teach them how to go through like a 30-minute drill before the close, what to look for, what sort of signs to say, okay, now is the time to pull the plug or not. So if we're looking at a stock and I see this sort of move, and we've gone from roughly 161.87 or something up to 168.80, so it's almost a 5% move in that week. That's sort of a if you annualize that return, you're doing great. Okay, so any questions on the hourly charts? All right, well, let's go to then what part of the analysis part is I look into the daily charts. So on the daily chart, I've added the approximation of my Stark bands. You see down here at Keltner channels, you have to change it 6, 2, and 15. Any of you who are paying stock charts members, I would appreciate very much if you write the technical department and ask them if they'd add Stark bands to their platform. I have made that plea to them a couple of times. It's really stupid because, tell you briefly, it's such a simple change. So you'd see this Keltner channel formula. All you have to do is change it from an exponential to a simple moving average, and you've got Stark bands. So that's why these levels are a little different than the Stark bands you'll see on Yahoo or on one of the other platforms. But you can see the Stark bands really identify, let's have a quick review. Stark band developed by an old late friend, Manny Stoller, determine high risk buy and sell areas. So if prices are near that upper band, this red line, then it's a high risk time to buy and it's a low risk time to sell. That doesn't mean that prices are automatically going to reverse course. It just means that you're in the top 93% of the expected price activity. So it's sort of a probability play. And often what happens is what you see right here. We got up to the Stark bands 2 days, we consolidated 2 days, and then we started moving back up. So the problem is you're missing this trade, and you get in here, I got again, you get in right on this opening, which was probably the high. Then you have a pretty good downdraft from, of almost looks like $8 from 155.60 down to 157.50, going to probably stop you out before you even get a chance. But if you wait for a couple of days, then you can say, okay, well, my stop can be really tight here. I've got nice tight ranges. That's what I like to see. And you have another good move to the upside. So, I monitor these. You can see during this consolidation or continuation pattern we were talking about, we got near the lower Stark bands a couple of times and near the upper Stark bands. So, in April, this is where the buy point was issued. This is the following Friday's close. We got pretty close to the Stark bands, but not above it. And we essentially sort of treaded water here until earnings, where we shot well above, the upper Stark bands on a daily basis. So, of course, it's important to look at, how do I, what makes the final cut on a weekly basis. This goes back to the weekly chart as of the 5th. And these are the two indicators we talked about setting up in stock charts. The first one is the relative performance. That measures the ratio of the S&P to the stock or the ETF and the on-balance volume. So this is a very bullish setup in my way I look at things. As of the Friday, the April 5th, we had the RS was above its moving average, just started to turn up. Volume here had declined as prices were moving sideways. So there was no evidence of heavy selling like there was during the decline in last fall. And the on-balance volume was bullish. In fact, the on-balance volume, is a leading indicator. So you can see it made a new high here, even though prices had not made a new high. So it had pulled back to support and turned up. Often the best buy signals occur when you get that sort of setup. So that validated my reason to be buying this stock the next week. And that's sort of the key criteria, that I look at. Part of the decision-making process, is, let's see if I have the pivots on here. No, okay, let's go on using stock charts. When you have a daily chart, they give you the monthly pivots. So these are in green. Once again, R1, R2, the solid line is the pivot. You can see that during this continuation pattern, we kind of moved above and below that pivot level, for a good part of March as we consolidated from that high of 66.38 down to, 56.90, 58, 57.29, and then we started to move higher and before we got the big surge. So these will tell you right now, of course, we've moved above, all the monthly resistance, and it's only, 3 days into May. If you look at the weekly data, you get yearly support. They don't have quarterly pivot levels, available, which is, I have to go to a different platform for that, and I'll talk about a little bit about those in the past. So typically, we had a sell order in that was actually below the open on this earnings day, so we took about a 6.5%, 7% profit on half the position. I tend to do that, particularly. We were in this position for a while, so let's see, we're at the 5th, so, we got in right in this period here. So it's been, going in 3 weeks. So I want to reduce the exposure in the position. This is a pretty bullish move, so I do think it's going to go higher than this. But I don't want to have a full position on. That's why I recommended, I, have my clients, take put an existing order in to sell at that level. You see right now, you can make a case that we're either testing, this upper trend line here. So we talked a little bit last time about how, how you determine, an entry point, and I spent a lot of time looking at the entry points. This big bar last week, of course we can, let's go down and see exactly what that bar's range was. So the high, you can go to inspect if you're a paying customer. Once again, I get nothing from stock charts other than have you hopefully right to have them add Stark bands. So you can see below in that little box a high of 181 48, a low of 65. So that's, over a $16 range in the stock last week. So typically when you see that large, a move, you are going to see go higher. You can see back here we had a pretty substantial range from $43 to $14 range back in here, and does favor you're going to get higher in the next 2 to 3 weeks. So I'll be watching, looking at where the quarterly pivot resistance levels are for another profit taking level, or, of course, signs, based on the daily studies that anything is changing. You can see that the weekly studies that were bullish when we recommended have only gotten better. OBV has made a new high. The RS is broken out, so it's clearly a market-leading stock. So that's all good signs to not get rid of it. But in terms of money management, I look at it as being a way to take half the position off and add to something. Have an opportunity to buy something else. Okay, we can do this. I have another nice thing, as I mentioned before. If you do have this set up, you can have your scan set up. So this is sort of a basic scan of the stock. You can see we're consolidating right near the upper stock band. We probably can go, get back into 75 or so. That's where the R2 is. But you can see the volume on the move is the top there. If you want to look like, one of the stocks I talked about last weekend in my Forbes.com column was the energy sector, because the weekly chart looks so bad. And look what as we started the week, that was the 25th was right here. That's where we ended the week, and we started the 29th. It's been very ugly. We went from about 67. I guess we closed on the 25th at 67, and now we're down, made it as low as 63. So that's the kind of thing you look at when you start to see the daily studies starting to roll over. Then that's usually the time to either take some profits, tighten your stops, etc. And that's generally which is better for quarterly pivot levels. So some of you've asked about those. I sent out an Excel spreadsheet, and you can cancel. You can check out how to calculate the quarterly pivot levels. They often do a good job of catching a trend. Not always, but often. Recently they turned negative on the healthcare sector, and now a couple of them have flipped back to positive. This shows the QQQs, the signals going back to 2016. This was the end of a quarter here. The start of the next quarter, we closed back above in that case, it was the third quarter pivot. And, we continued, to move higher, up until, April of 2018. It was negative below the quarterly pivot for a couple of weeks. And then it moved higher. And so, and then it turned negative in October, I think October 12th, and stayed negative until the 18th of January when it closed at 161.32. The advantage is you just do one calculation every quarter and you're good. This is one of the videos on the Facebook page showing, this is the relative performance. Healthcare sector turned positive in 2011 and stayed positive for pretty much the next 4 years. Quite a bullish setup, and it can, in a strong bull market, you see that, frequently. And so, if we go back here, you can see the Facebook page. If you want to follow on Facebook, I usually do, posts about my articles on Forbes.com, and they're often up here. And anything else I have to share, here's the notification of a recent video on the indicators that was from a couple weeks ago. So if you're interested in that, you'll stay in the loop. I think everyone, Mike, is hopefully seeing the change in slides finally. Questions about what we missed. So, you go to videos, you see, here's a whole list of all the videos that are currently up there. And they also posted on YouTube. So, You know, if you sign up to follow on YouTube, then they'll send you an email anytime I post a new one. These are the, you know, these sort of consolidations. And you may, the one question nobody asked, but you might ask is like, well, how do you tell that this pullback is going to be successful? Well, if you noticed, you know, when we looked at, you know, with the indicators, the on-balance, you know, volume, you know, was stronger than prices here. So it broke out already. So it told you that prices were going to break out as well. So it broke out right around, you know, here, and, you know, held firm when prices pulled back. So that shows you there was not much volume on the sell-off, and that when you had this close, that was a very bullish close after, you know, 4 weeks of setback. So that helps you control the risk, and also helps you create an opportunity where you're not jumping on it, on the market when it's surging and everyone's trying to buy and they're pushing the bid ask too high. This gives you an opportunity to get in at a good price. So I think most of you can see that. I will, if anyone wants a quick look at a market or two, I will do that since I have a few more minutes. Okay, PPC. Somebody wants PPC. Okay. So first of all, let's look at the weekly. Okay, weekly. You know, looks like a nice bottom formation in here. You know, we did get a doji buy signal right here 1 week after the low. Remember, you know, quick review, you know, doji buy and sell signals. So, you know, buy signals are best when they occur after a prolonged decline. Then you form a doji. Okay, so that week the stock opened at 1558, closed at 1559. Definition of a doji, and had a high of let's see, what was the high? 1583. Next week we closed at I guess we didn't close. It looks like we didn't close above the doji high till this week, which we closed at 1754. So that was the buy signal. And, you know, for a sell signal, you want to get a sell signal after something has had a prolonged rise. Nothing really here. So this sell signal that may have occurred right in here, you wouldn't take. So things I like about this, just basic. I like the fact that it's above its rising 20-week EMA. You know, the RS, how it's doing this SP is generally positive. You know, I'm watching this peak right in here to see if it did move above it 2 weeks ago. You know, then you go to the risk parameter, and unbalanced volume, you know, is okay. It's not great. It's not leading prices higher. So let's, if we go to a daily chart, new positions here, real tough. Yeah, I mean, under here, 25.30, you know, which is about 10% below where we closed. Targets 29.01, 31.01, you know, and if you look, you know, quickly look at using the weekly at this, you're up near that upper band here, so you have been for a few weeks, so that suggests it's overextended. So, you know, I guess if you're in it, whoever asked, you know, I wouldn't get too much greedy. I would maybe reduce my position. You know, about the only stop you can use is under the week's low of 26.23. So there's not that. Okay, one more I'll take, SMH, which is of interest to everybody. Let's look at the weekly first of all. Okay, weekly indicators are still strong. We had that big drop yesterday, or last week rather. We got down to a low of 1349. The real good support for this is between 11, between right in 1250 down to about 1050. So right now, it's acting pretty good based on the weekly. That might have been all. You're pretty much the only stop you could use was under the 1349 level. So, that's not too bad. It's less than 5%, given we closed at 117.78. Let's quickly look at the weekly or the daily chart. I usually like to see a little bit more of a pullback than this, and we pulled right back to the 20-day EMA and got close to the daily Stark band, so that's good. Daily indicators have turned up. So whether I'd be chasing it up here, I don't know. Certainly if we got a deeper pullback, I'd be buying. You can see let's see where the hourly might give you some, and hourly is sort of indiscriminate. You can't really tell, you can see the resistance level right around 1860, initial support down around here around 1515. And then you can see why I like it down more in the 1250 area where there's much better. I of course follow many of the individual semi-stocks. It's kind of a mixed bag. So, that goes into my recommendations as well sometimes, whether I'm necessarily going to recommend, an ETF. One we are in is FDN, which is really pretty much a FANG play. It had a pretty good setback, down here, so that's sort of, it got right back down to the S1 support. Now it's heading up. It does look like it's completed this correction. So then, kind of 150, 254, nothing goes up forever. So, I'm kind of watching the level on the upside. If we get above this 149.61 area, then I'll probably be pushing up my stops a little more. My plan is to do at least one of these free trading lessons every couple of weeks. And if you want to be sure when the next one's going to be broadcast, you should go to viperreport.com and sign up to the viperreport.com email list. From the home page, you can click on this link, 5 Ways to Improve Your Trading. It'll also send you an ebook or allow you to download an ebook with some of my trading lessons. And also, you'll be on the list, so I announce the courses in advance and also send updates when recordings of the sessions are available. Also, I send out emails when I publish something on Forbes.com where I'm a contributor. This was last Sunday's article, The Week Ahead in Indecisive Market. Lots of charts, and also you'll get an idea of how I use some of the indicators and discuss them every week. Also, if you're interested in how the indicators are used to time both ETFs and stocks, you might want to try one of my premium services, the Viper Etf Report. You get 2 reports a week, usually 5 to 6 pages in length, detailed market commentary, specific recommendations, and stops. And also they're designed to teach you about using my technical tools. Viper Hot Stocks also is published twice a week and includes my weekly stock scans where I look at the best stocks to buy or sell depending on the market direction. Each is only $34.95 per month. You sign up through PayPal. Should you want to cancel, you can cancel online at any time. For those who want more detailed one-on-one instructions, I also do mentoring, and I have a intensive advanced decline line course. So thank you for tuning in, and look forward to seeing you in a couple of weeks for the next lesson.